as the finance manager at Cooperative Development Institute. I have the pleasure of working with Annie and Terry and the ABC team in almost all trainings and workshops that I get to do, and specifically whenever it's co-op specific. A great team. And also for all of my accounting needs, Bruce is my go-to. So I'm super thrilled to be sharing the space again together. And I will pass it over to you, Bruce.
Hello, everybody. My name is Bruce Mayer. He, him. Work at Wagner CPAs in Madison, Wisconsin. And we do lots of tax work with work co-ops, conversions, and so forth. And then for some larger worker co-ops, we work on audits and financial statement reviews. And we did this last year in Baltimore, so it is fun to be back together. And Annie, if you want to continue the session.
I'm going to jump in and just say, last year when we did this in Baltimore, I think there were 20 people, possibly, and now we have over 100. So this is so exciting. Just wanted to add that. Thanks.
Yeah, absolutely. I know. I'm kind of blown away right now. So I'm excited to see how this goes. I'm going to pop a link in the chat. And the invitation is to click on the link. I will share my screen and you will be participating in a little sharing check-in icebreaker activity. The question is, what comes to your mind when you think about finances? So when you click on the link, you will be given a few spaces to put or you're given a space to put your answer, and some folks are already filling it in, and we will see what comes to your mind when you think about finances. Of course, please, if you are participating in Spanish, you are welcome to put your answer in Spanish, and I will read them aloud. Complicated is highlighted at the moment. That means that it has the most results. More people have put complicated than anything else. Now we've got scary, so some emotional responses. That's definitely true when we think about finances. We can feel scared, we can feel stressed or confused. We also have some just, sounds. Ah, I saw ah a couple of times.
I really like the wish someone else handled has been floating around. A whole phrase there.
Yep. Difícil, difficult. Puzzle to solve. Procrastination inducing. So some takeaways I'm seeing are that that folks kind of are bringing some emotional reactions to finance, and so part of what I'm hoping we're going to get through, we're going to be able to do today is to break through some of that, some of those difficult reactions to finances. So I'm actually also seeing, I was just taking a moment to read the some of the smaller words there, and I saw empowering in there, which I love because I feel that in my work and practice. So that's hopefully something we'll uplift today and amplify the feeling of power when we think about finances. Any other takeaways? Alex or Terry or Bruce, any impressions when you look at what folks are bringing to our session today?
I am also trying to find a few of the more positive ones to pull out. I found an exciting. Oh, I see a destigmatize power.
Oh, good one. I didn't see that one.
Yeah, I mean, I think one of the things that we talk about a lot that is that, and Annie, feel free to interrupt me if you're going to touch on this later, is the ways that finances and financial systems are a very strong tool of racialized capitalism, which explicitly keeps certain people and specifically marginalized communities and marginalized individuals out of these power positions. And so it is like intentional for women, for queer and trans people, for folks of color, for youth to feel scared of or not empowered by money and by finance. And so just naming that as like a systemic thing that happens. And so it's not surprising to me that these are a lot of the reactions we're getting.
Absolutely. Right. So I think that some of the grounding material that we bring to most of our, or to all of our facilitated trainings is an acknowledgement and reflection on the system that of racialized capitalism that we are in, that we are existing in, and that we are working very hard to subvert. And part of the way that we're doing that is we are skill building, we are sharing our wisdom and our knowledge and ownership, and to counteract the theft of wealth and life, particularly for our Black, Indigenous people of color, our queer and trans siblings, and uplifting uplifting our community by with the power of financial and information, financial education. So with that, I think I'll just take a moment while I'm going to unshare my screen. Thank you so much for participating. Thank you also for those that messaged the host and with your reflections, and thank you for those of you that are observing and observing and participating in your own space. So let's take a moment and sit with the reflection before we dig into the questions. Great. So the first thing that I would just love to invite y'all to do is to, we're going to do the Q&A in various points during this session. So this will be the first part. So the first piece. So if y'all could please, and perhaps, and maybe some of our moderator or host friends could help me out here. Who are people supposed to message with their questions?
Please message moderator for questions.
Okay, thanks, Olga. So please message moderator with your questions. What questions are you bringing with you today?
Annie, do you want me to start listing them off or wait a little bit and bundle?
You can start listing them off. Thanks.
Okay, great. So the first question, is investment income patronageable?
What does that mean?
Tulasi, could you please send me a message to clarify a little bit? And we can move on to the next question in the meanwhile. So how much would it cost to outsource bookkeeping, and how do I work it into the workflow of the business?
Great. Ooh, we're going to start with a pitch. I'll start, and then I'll pass the mic around. How much it costs to outsource bookkeeping certainly depends. We do love to train people if they are interested in doing their bookkeeping in-house. Some folks do choose to do that, especially in startup phases. What we like to do is we like to meet people where they're at. So as bookkeepers ourselves, of course, you can outsource your bookkeeping, perhaps budgeting for, depending on your location, a couple $100 a month for bookkeeping. And that can, but it really does fluctuate cost-wise based on what tasks you are doing yourself. So if you're doing a lot of tasks yourself, which include, receiving payments, sending out invoices, writing your own checks or issuing your own payments, a lot of the sort of back office management, you can outsource a bookkeeper to oversee your books by doing monthly reconciliations of your accounts, your bank and your credit card accounts, and therefore providing an extra eye and something that we call internal controls. So having an extra eye on your books to prevent errors or in the worst case scenario, theft or fraud is a great practice for any small business or any organization for that matter. And working it into your workflow, like I said, can really shift depending on what responsibilities you have in-house. If you have an office manager, somebody that is doing accounts receivable, accounts payable, that is issuing invoices, billing clients, receiving payments, or issuing payments to vendors, cutting checks, running payroll, that kind of thing, you can you can cut down on the amount of work that you're outsourcing to your bookkeeper. But it all depends, and we love to engage with you at whatever stage you're at, and just give you good advice about best practices. Alex, anything that you would add to that?
Oh, that was great. No, I think it's hard to answer the vague, like, what would you quote us question without knowing all of the variables that Annie put out there. But yeah, I'd say number of transactions and how much you're doing in-house are really the two variables that I think about. Potentially also the setup costs to get things going.
Yeah, another bump in your monthly bookkeeping cost will happen when it is tax time and you're doing a year-end close, or if there is, an influx of, sales, if you have a big fundraiser, that kind of thing. That's a good point. Terry, would you like to add anything?
The only thing that I would add is that in addition to bookkeeping services, since it's a little bit of a pitch, is workshops and consulting are a great way for any organization to expand what they take care of in-house and understanding what their bookkeeping needs are.
Great, thanks. Anything you want to add, Bruce?
No, I think that was a pretty comprehensive description. We don't really do much bookkeeping, so I'll leave that to you all.
I will say, if you need your taxes done and tax forms filed, just in case the question implied or didn't separate out bookkeeping and taxes, just remembering that filing taxes is also an important part for any organization. So I know I work with Bruce a lot. I am, as a bookkeeper, not an accountant, and I do not work externally with the IRS, is how I like to describe it.
Yeah, that's a good distinction. So we also, ABC also works with Bruce and Wegner for our tax return prep. So two distinct scopes of work there. Can we grab another question?
Yes. Just as an FYI, this is very popular. You have about 30 questions on deck.
Great.
I am wanting to start a brand new co-op. What financial systems should I put in place before we start having paid staff / co-owners?
I'd love to have someone else jump in just to balance out the voices here a little bit.
Can you repeat it one more time? I'm gonna write it in the chat just so participants can follow along and also I can remember what the question is.
For sure. So I am wanting to start a brand new co-op. What financial systems should I put in place before we start having paid staff / co-owners?
Great. I can take the first little bit. Maybe we'll do this in stages because there's so many fun things to think about. So I would say some of the things that you should have in place, and in all honesty, there is the ideal version of, I appreciate the before we have paid staff or co-owners, ideal to get your system set up. Reality sometimes has a different timeline. But things to have in place, I would say, are a bookkeeping system. So, or like, that's the word that you asked in the question. A system meaning like a database or software somehow where you're actually putting your data into, so your data entry program. That could be something like QuickBooks or Xero, which are two online-based and very traditionally owned and run businesses. You could also use spreadsheets when you first start out, but basically understanding where you're going to be putting all your information would be important. And I would say understanding what your chart of accounts is, and your chart of accounts is the way that you are categorizing all of your information. It is all the words, like all your different types of income, your different types of expenses, your different loans that you might have, the accounts where owner's equity eventually will go. So understanding the ways that you want to categorize your income, and that's going to probably be based off of what your business plan or business model is. So if you are a farm, you might, for instance, have your chart of accounts, have your income be farmers market, CSA, and wholesale. Whereas if you are a construction company, you might have commercial projects, residential projects, and small, something like that. So those are some of the things I would say, and also have skilled people in place in which to use those systems. That's my start. Bruce or Annie, whoever wants to pick up, that is not everything.
I think that it's a lot. I guess I would urge you not to start out in Excel unless you're very, very simple, because that can be hard to untangle later. And yes, you need a chart of accounts. You need to figure out how you're going to, take in money, pay out money. If you're going to do payroll or not, you need to figure out what kind of entity you are to know how to do that. If you're taxed as a partnership, you do it one way. If you're taxed as a corporation, you would do it another way. And get those things figured out. And if you need help, certainly, one of the co-op bookkeeping services would be a really good idea to get you going. If you really feel lost, you may not want to do this yourself. So, Annie?
Mm-hmm. Yep, and I put in the chat the names of the software that Alex mentioned, QuickBooks and Xero. They're popular options. We actually do work with folks from day one, as in a lot of times with co-ops, day one was actually you know, several months ago, or maybe last year when you started organizing with a group of folks that were, you know, had an idea. And what we like to do is we like to tap in as soon as possible within that organizing phase so that we can get the accounting set up sooner rather than later. So tracking is really important. Tracking hours that you are investing in the sort of organization phase, even if you haven't, you know, incorporated or filed your papers or, you know, opened a bank account yet. Tracking the time that you're investing is another really important element, especially when we're talking about starting a new co-op. And there are a few things that you can do with those hours that you track, including you know, paying yourselves for them when the business has money. You can also pay yourselves in a different way in a form of something called sweat equity to basically count as an investment into the co-op. But the only way that you can do that is by tracking your hours, tracking your time. So that's the only thing I would really add. Of course, accounting software is an expense, but I would say that it is so important that it is one of those, when you're making your startup projections, you are calculating what your startup expenses are. It is so important that I would include a subscription right away. And I say a subscription because nowadays, working with your bookkeeper, working with your accountant is going to be so much easier if you're doing it on the cloud. And QuickBooks Online and Xero are both cloud-based, and you can invite your bookkeeper and your accountant, and they can work with you without having to pass a file back and forth from computers, which is just a total nightmare.
And I would also add, oh, were you going to keep going?
Nope, go ahead.
I was adamant against QuickBooks Online for years, and then started working with more co-ops and really enjoyed the ability for multiple members and co-owners to access the financial information. So that was another reason for me to move towards the cloud, was that when there was a desktop version, often only one person could access the information. So in order to set up more transparent systems. And one other thing I just want to throw out there is the concept of getting a bank account and knowing who is going to be on your bank account and why, as well as knowing how you remove people from a bank account down the line, and what are the requirements to both add new people and remove people, especially if you are a decentralized or geographically dispersed organization.
Thanks. Anything that you want to add, Terry, before we move on to the next question?
The only thing I would add was would be a budget, and maybe that would be the slightly next step, so that everybody is on the same page.
Mm-hmm.
What the vision is. That's all I would add.
Thanks. Great. Olga, I'm curious to know how many questions have to do with patronage, because we have a whole little section on it. So if there are sort of there's like a group of patronage questions, maybe we can keep those sort of together, clumped, and just take some of the more startup oriented questions if there are any others. It seems like kind of a good place to start.
Sure, there's definitely about 5 patronage questions that I see right now.
Great.
So the next question that I see is, how can we handle building a cooperative business across jurisdictions, like different states in the US? What should we keep in mind?
Ooh, great question. I think some of the tax implications, Bruce would be a great person to explain. Yeah, Bruce, why don't you start, if you wouldn't mind?
Okay, I'm not sure I caught all that. It said across jurisdictions. Was that within the United States or outside?
Correct. So the question is, how can we handle building a cooperative business across jurisdictions, like different states in the US, and what should we keep in mind?
Sure. That is actually a fairly complicated question, but there are quite a few co-ops, especially tech ones, that end up with one employee in each of 3, 4, 5, 6, 7, 8 states. And part of it depends on how you're set up. If you're taxed as a partnership, there's a little bit less registration that you need to do. If you're set up as a co-op corporation and your owners are paid as employees and they get a W-2, then you need to register in each of those states so that you can have a payroll withholding and pay unemployment taxes and follow those rules. So you certainly need a sophisticated payroll provider when you're starting up. When you're taxed as a partnership, that is not an issue because people are not getting W-2s. You are still supposed to be registering in those various states. Whether that gets done or not, there's a lot less regulation in that area. But you do need to think about that. Businesses that, for instance, have sales tax and potentially other taxes in states spend a lot of time chasing around when they are in multiple states. Getting registered for, employment taxes can take a lot of time. So you need, if you're going to do that, you need to have somebody who's spending a lot of their time on administration. And then you need to consider, if filing income taxes in all those states and how that might work. The co-op corporation files in each of those states, and the individuals would all file just in the state where they get their W-2 withholding, where they live, presumably. The partnership, there's a question about whether the partnership should be filing in all of those states, and then potentially the owners need to file in all of those states too. So that's a tax question that you need to look at. But certainly you can start up a business that is virtual and you have people in many states. You just need to make sure that you're allocating administrative time to deal with that. Exactly how much, I don't know. There are certainly some co-ops out there that would be able to talk to you about what it takes to keep registered in 8 states or wherever they are in.
Great, thank you so much. Yeah, I think that was such a comprehensive answer. I'm curious to know if there are follow-up questions. So maybe if you do have additional questions that are inspired by our answers to your questions, feel free to continue to message the moderator with them, and we will circle back. Olga, are there any other questions about sort of startup phase?
Yes, let me pull one out. This is kind of a broad one. How do you engage members who resist having anything to do with finances?
I'm wondering if we have a plant in the audience that we didn't know about or can't. Yeah, we love that. We love engaging. We love engaging members with creative and participatory activities. I'll just start our answer because I want to give some space for Terry and Alex to expand. But this is, first of all, rooting ourselves, like doing an anti-oppression training or like a collective liberation training where we can start breaking down as a group our placement and our way that our identities interact with systems of oppression. And I'm starting there because folks that resist anything that has to do with finances, that might be coming from a place of trauma, of fear, that we can begin to acknowledge and heal and transform through. Starting there and then building out towards getting folks involved in ways that do not involved with financial systems, but in a way that is not, putting a spreadsheet in front of them, right? We're talking about storytelling, narrative budgeting, for example, getting folks involved in the hopes, dreams, schemes of the cooperative, because they're there, and then you can take the sort of number crunching and the financial analysis to a finance committee or someone that really loves spreadsheets and financial statements. I'll just pause there and pass it to Terry if you'd like to expand on that.
Well, it's funny because I feel like I really do experience bookkeeping as a healing activity, and it's really so emotional for people. And definitely by the time I come onto the scene, often there's something happening. So, I mean, I think that it really is, sometimes it's just taking your time and having more conversation about all the things that are happening around the finances, just to get some better understanding and get grounded into the same place before you take steps forward into figuring it out. I hope that makes sense.
Yeah, thank you.
That's it for me, Alex.
I think in addition, I love bringing in the acknowledgement of trauma and healing and systems of why, and really asking and digging in with members around why they're not engaging with finances. Oftentimes, I find personally that it's coming from some fear or like trauma response to not having access to support earlier in life, or their own class background or gender or things of that sort. And also other times it's, I don't have time or I don't like math. And so really just getting an understanding of why each person doesn't want to can be really helpful. And for me, I think making sure that you're starting at a place that is relatable. So starting at the entire organization's finances is going to be a lot. Working with folks and starting from a place of personal budgets or program budgets or a small piece, and understanding how a bite-sized piece works and fits in can often be a lot easier or more engaging. And to also generally, I like to remind folks that even when you think you're not doing math, you're probably doing a lot of math, or math is playing a part and finances are playing a part in your work. So what can we do to empower you in that? I think also acknowledging as the organization that engaging with finances is not only attending financial meetings or committees or looking at spreadsheets, but can be other ways that you engage with the organization and do a great job at your job. And lastly, I will just say games are really fun. We do a lot to sort of gamify finances, and that is a really just great entry point to be like, look, we're gonna like talk about finances, but we're gonna play dominoes, or we're gonna play guess who, or we're gonna play, you know, we're gonna build a puzzle, and really kind of starting there where the end goal is not talking about finances in that specific activity.
Absolutely.
Also, great question. I just want to also say it's hard.
Yeah. Yeah, and I think just to echo and amplify what Alex said about games, making it fun, being creative about ways that you're engaging with finances, and also relating it back to overall you're running a business together. we need to make decisions based on, you know, many aspects of our business, and one of them is the financial aspect, the financial position. So doing what you can to getting folks' voices heard, even if they don't want to engage in a more traditional way, and that could be building shared vocabulary, playing a game that might be a vocabulary building game, understanding what financial reports are what, you know, which report is telling us what thing, and just, yeah, just breaking it down to basic skills before launching into the presentation of your financial statements at your member meeting every month. Right? So I love this. I love that question. Thank you so much.
Bruce, do you have more? I had
Yeah.
one other thing, but I want to hear, Bruce, if you have thoughts.
Great.
Well, I don't really do financial education for entire co-op or board, so other people are usually doing that. I'm generally working with the point person from a worker co-op, and of course they may well have you know, fears and areas they have not you know, learned about yet. So I always try and remember myself as a young person before I started learning about accounting, because I wasn't born an accountant, and think about patient ways to explain to somebody. So, but yeah, I don't have any actual experience teaching like, you know, Annie and Alex have some very nice interactive workshops that do play games and so forth that I think would be very helpful for people.
Thanks, Bruce. Also,
I'm sorry, that you want to do that before you have a financial crisis. So, you know, early on in somebody's time at your co-op, you should be providing that education, not when, you know, it's a disaster and there are problems and so on.
thanks.
Sure.
I'm just going to second that. You know, sometimes finances are talked about as if they're another language. And so how are we supporting folks learning something new and learning a new skill? And I love whenever Bruce says, I wasn't born an accountant. I did have to learn things. And the last thing I wanted to just share, which I was like, oh, right, think of my experience in the organizations I'm with right now, and the ways that building in systems of accountability and empowerment actually help people engage. And what I mean by that is when you have perhaps a treasurer or someone in the finance role who is seen as the finance person and having the answers, it's really disempowering for the rest of the team to engage in ways that are creative and collective. And so if you're coming to meetings and asking one person, can we have a raise? Are we in trouble? And everything is directed towards one person, and that one person is giving the answer as if it's truth out, then I know I wouldn't engage very much because I wouldn't feel very empowered. If we have processes where folks are looking at each of their program budgets month after month to see how they're doing, they're able to make adjustments. They understand what the process is for both creating your organizational budget, for adjusting it down the line, how to request for changes from the group. If those processes are clear and also sort of ushered through by the finance team, I find that folks engage more because it's clear who they go to and where, and it's also more clear that it's a collective process to answer questions. And with that, and just what I mean by that is my philosophy personally is that the answer to a financial question is never a yes or rarely is a yes or a no. It is usually a what do we need to do to make that happen if that is what we want. So if a question is like, can we get a raise? The answer, if someone says no, that means like we can't get a raise if we want everything else to stay the same. But the answer might be, yeah, if we all want a raise, what do we need to do as an organization to continue to meet our financial goals and continue to meet our financial security so folks feel good about it, that there's always a creative way to meet it. It just might mean shifting a different priority. and really coming at your finances from that sort of creative how do we perspective rather than a yes no perspective can also help shift empowerment and engagement.
Great, thanks. I'm wondering if now would be a good time to just share I just have a few visual slides about patronage because I want to make sure that we spend a chunk of time on patronage. Is that okay to do right now?
Yes.
Thanks, Bruce.
That's what you were asking. Yeah.
Okay. All right. Great. Thank you. Cool. So sharing screen. I know we have some patronage questions out there. So hopefully this addresses it. Y'all are seeing my patronage patrocinio slide, yeah? Cool. Okay. So this is just, I'm just gonna talk for a little bit and a very little bit, and then we'll see what questions come out of it. I want to preface this by saying that this is this particular model. In fact, the word patronage is geared towards a specific type of co-op, which is a cooperative corporation. So that is based on a corporate statute in your state. Now, there are also lots and lots of co-ops that are not formed in this way. They are partnerships, as Bruce was mentioning, LLC co-ops, and patronage is not, it's not the same thing, but the analogous system is profit sharing. So I want to preface that, and we can dig a little bit more into the difference of the tax implications and of profit sharing and patronage after this little presentation. The differences in taxes are probably the biggest differences, I would say. Either way, you can calculate your patronage or your profit sharing in an LLC co-op in the same way that you calculate patronage, which is on the basis of hours worked. So it's a proportion of hours worked. So you can also calculate your profit sharing in a different way. LLC cooperatives, there's more flexibility in the way that you calculate your profit sharing, and in fact in the operating agreement itself, that sort of legal document. Anyway, zooming out, this is patronage, okay? Actually zooming in, right? This is patronage. So we start with, this is super broad strokes, and I invite Bruce to correct me if I say anything incorrect or dig into something that you'd like to expand upon. So this is, and this is also something that I've learned by working with CPAs, doing, year-end calculations with the generosity and the assistance of Bruce and his colleagues. So just a shout out there. So we're starting with our net income at the end of the year. And the net income, as a very basic review, is our total income, what we earn as a co-op, minus our total expenses, what we spend as a co-op. The difference between the two, if positive, is a net income. If negative, it's a net loss. And we're gonna just forget about that scenario for now. We're just talking about a scenario in which we have earned more as a co-op than we have spent, okay? So we have net income or profit at the end of the year. So we get together as a co-op and we make a decision, okay? We make a decision about how we're going to divide our net income. Now, part of our net income, and we're calling this allocating, okay? So allocation means how are we dividing it? How are we splitting it up, okay? So we allocate part of our net income to our collective equity or retained earnings, okay? So this portion of our net income is taxable to the cooperative, meaning that the co-op files its own tax return, just like we as individual members, worker owners of co-ops, file our tax return. The co-op also files a tax return. And the co-op pays income taxes on the whatever part of our net income is allocated or shared by the co-op. Now, retained earnings, this collective equity, actually, you know what, I'm gonna stop. The second question, the second place that we allocate our net income is to member and the members. And this is where we start to call this patronage allocations, okay? So the patronage allocations, these are worker owners that have worked for a certain number of hours over the course of the year. We divide the amount of hours that the worker owners have worked individually by the amount of hours that the worker owners have worked collectively. How many hours have I worked divided by how many hours have we all worked equals my share of our net income, or my patronage allocation. And these allocations are taxable to individuals. So you will receive a tax form called a 1099 PATR, and you will give that to your tax preparer, and they will include it on your as your taxable income. This is taxable to individual members. Now, if we just follow the blue box, this is the same patronage allocations that we just saw. So the amount of net income that is allocated to individual members then goes in two directions, goes to two places. We are subdividing this. One place is we're deciding, and we decide this as members, we decide how much we're going to give to each member of their total patronage allocation in cash. And the IRS says that it needs to be at least 20% of our total patronage allocation. So that's just a minimum. You can distribute more cash than 20%, but no less. And the rest of it is allocated to our internal or individual capital account as retained patronage. Now remember, we've already paid taxes on it, so our total patronage allocations, what's in the blue box here, is what we pay taxes on in that tax year, in the tax year in which we receive the patronage. And what we're getting, so we're paying the taxes on the 100%, and say we get 20% in cash, we're still paying taxes on 100%. Okay. So the retained patronage is in our internal capital account, and our internal capital account is like any other equity, is outlined on our balance sheet in our equity. So just a little snapshot of what our balance sheet looks like. We have our assets, which is what we own as a co-op. So we're talking about a co-op's balance sheet right now. So what do we own? We own our cash in our bank account. We own or have claim to the amount of money that people owe to us. So that's our accounts receivable, money that we have billed to our clients that they haven't paid yet. Those are examples of assets. We might own a building, or we might own a car. We might own computers or inventory. Those are all examples of assets. Now, our assets balance with our liabilities and our equity. And our liabilities are what we owe. So while assets are what we own, liabilities are what we owe. And we might owe money in the form of loans. Maybe we needed to get a PPP loan, or another SBA loan, or a local loan to offset the slowdown of business during this crisis of the pandemic. Maybe we have some bills that we haven't paid yet. That's another example of a liability. And then the equity piece are our investments, and again, our retained patronage. So just to give you a sense of our financial statement, so this is a financial statement that over the course of your, engagement with, as a member of the co-op, we'll just work to get more and more familiar with. But retained patronage is part of our individual or internal capital account, or ICA. And the other part is our investments. So anytime we make an initial member investment, that is also part of our ICA. And then any patronage allocations. So that the last piece of our equity is remember back from when that first subdivision where we took our net income and we had an allocation to collective equity or retained earnings. That is also on our balance sheet. And the other part that comprises retained earnings on our balance sheet is the other allocations of net income from prior periods. So net income comes from our profit and loss. So that is our net income from current periods. So if we're looking at our balance sheet for today, September 10th, our net income reflects the activity on our profit and loss currently. Retained earnings reflects all our allocations of our net income from last year and the year before and the year before and the year before, however many prior periods there are. So that's my little spiel. I'd love to hear what questions folks have, but first I'd like to just pass it to Bruce in case there's anything you want to clarify or correct.
I'm sure. Yeah, nothing to correct. The one clarification I would make was just to emphasize back when you were dividing your net income up for allocation to members, that if you have non-member employees, in an entity text as a cooperative, those people still have to be in your initial formula. And so that would be the portion of earnings that would go into retained earnings. It can't be allocated to the members. So you have to take the hours of everybody who's working, whether they're an owner or not. That's different in an LLC tax as a partnership because the law requires that all profits are allocated only to owners. So you don't allocate to anybody else who might be an employee of your partnership or in some other capacity. So I just wanted to clarify that because I have seen co-ops where they allocate 100% of their net income, only the members in a corporation when they actually have non-member employees, and so can be a misunderstanding.
Yes, thank you. And that is at this point here, right?
Mm-hmm.
Yep, great. That's super helpful. So what we actually use at ABC is we have a spreadsheet calculator that Bruce, you passed to me once upon a time, which has the total numbers we export from our time tracking software. And someone did ask me directly a question about how to track our patronage. And the answer is that we track our participation, our patronage to the co-op in the form of the unit of time. So we track our time, we track our hours, and at the end of the year, we prepare a spreadsheet that has the number of hours that worker owners work and to create these member patronage allocations. And as Bruce was emphasizing, part of the allocation to retained earnings includes a proportion of any hours that were worked by people that are non-members. So in the case of ABC, we include our candidates. So Terry, working right now, any proportion of the hours that she is working as a candidate and not yet a worker owner will be applied to the allocation to retained earnings. That's a great clarification, thanks. Cool, all right, I'm gonna stop sharing because my slides are bugging out. I don't know why. So the software program that we're using to track hours is called T-Sheets. There are lots out there though, but we use it at ABC. We use T-Sheets. It's just the letter T and then sheets. I'll put it in the chat. And we also have a question about patronage income being subject to self-employment tax. Bruce, could you speak to that? Because I would love to hear the most current and expert answer to that question.
Sure. That is a very significant and somewhat of a gray area. So the general answer is no. We have an article on our website, wagnercpas.com, about that. There are other articles out there, and there are attorneys who spend a lot of time writing very lengthy articles about the legal issues behind that. Since we are going to run out of time here, I'll just say that it should not be subject to self-employment tax. There are a few caveats around that, nuances, but for the vast majority of worker co-op members, you should not be paying self-employment tax.
Thank you so much. Yeah, that has been a hot question in the last couple of years. Great. So I'd love to just see. I have a doc that I'll share with Alex and Bruce and Terry in a moment. But while I do that, it just has all of the questions, so we can look at all of the questions. First, I just want to clarify that we are going to extend the session to 4:45 Eastern. Is that right? Okay, great. So I know how much time we have. Alex, is there anything that you want to do you want to add to the patronage explanation at this point before we dig into more of the questions?
I will just say that it's hard and complicated for me because it has yet to be my lived experience of actually it being my own money. So if you are like me, sure, there's a theory, but until it's like my own dollars being split out this many years in, I'm still remembering some of those pieces, but it's complicated and there's lots of folks here to support. I think really it's a great place to make sure that you're asking for support if you're not sure how the calculations work. And after 1 or 2 years of doing it, you will be building up those skills.
Absolutely.
So no clarification, just like you got it, you can do it. It is complicated and doable.
Great. So I'd love to just shift for a moment over to the PPP just to make sure that we have some time to address that as well. Just for a moment, I'd love to actually, sorry, I'm just like reading all of the questions here. We have several questions on the PPP, so I want to make sure that we have time for that. There are some patronage questions in here. I think a good one to just grab for now is to understand about how to make decisions about allocating profits to patronage dividends. That for ABC has been pretty clear for certain pieces of it. So that first decision point, how we're allocating our net income, are we allocating to retained earnings or are we allocating to individual member patronage allocations? That is based on a decision that is in our bylaws. That is a language that is in our bylaws, which is that every year, the board of directors, the board of ABC, and we have a collectivized board. That means that every member, every worker owner is a member of the board of directors. That's not true for all co-ops. That is our ABC's practice. And as a board, we decide what the retained earnings target is. So that is written into our bylaws as every year in our board meeting, we decide what our retained earnings target is. And so part of that retained earnings allocation is, of course, required to be whatever the proportion of non-member hours is. Hearing an echo. If someone could just mute, please, if they're unmuted. Thanks. The other part of retained earnings is designated by the board. So we say we want our retained earnings target to be X% of our total patronage. And so that is just a decision that we make based on our business goals, what we want to accomplish. And for us, it is to be able to pay out all of the individual capital accounts. So our retained earnings goal is 100% of what we have in our individual capital accounts. So plus a percentage more. We started at 3% and we're working up, just so that we have a bit of a cushion in case ABC goes out of business. We have to pay back all of our debts. We collect all of that is owed to us, and we pay back our owners what they have invested in their capital investments and also in their patronage. So that is our business goal. And you can define your business goals however you want. The other decision point is how much to pay in cash and how much to retain. And besides that, outside of that base 20%, that can be based on whatever you decide is important for your co-op. Maybe it's cash flow, maybe it's need-based. But that is outside of that 20%. That is any kind of, that is just whatever you all need as a group. What the co-op needs, balancing needs, right? The needs of the co-op and the needs of the members as well. Would anybody else like to expand on that question? Sorry.
I think the one thing is to think about what kind of investment your co-op needs. And if your co-op has quite a bit of equipment, or you have a lot of accounts receivable and so forth, you may need a lot of capital in your business. So you may want to retain more of that as a co-op, or retain more of that as retained patronage dividends. And you can also look at tax rates of your co-op versus tax rates for the individuals in the co-op, and compare who would pay more or less taxes if you did or didn't do a patronage dividend.
Great point. All right, I would love for if you had any sort of introduction, Bruce, to the Paycheck Protection Program. That it would be great to hear that, and then I can read off some questions that folks have given us about that particular program.
Sure, I will just go through this briefly. There's been lots of information out there, so I will keep it very, very brief. But one thing to consider is that Congress is currently looking at an additional stimulus package, which may modify some of the PPP rules, may expand the program further. At this point, it's closed to new applications, but exactly how forgiveness will work for some entities is still possibly up in the air. So my firm's recommendation, we have a group of people who have followed every twist and turn, is that you wait on forgiveness unless it's clear you have a slam dunk and your lender agrees. We would recommend holding off a little while. The one important interpretation that came out last month is that owners who own under 5% of a business are not considered owners for the SBA PPP repayment forgiveness determination. So that means if you have 21 or more members, which not very many worker co-ops have, then your people would be treated as employees and not owners. But for the smaller worker co-ops, your owners are considered owners for the PPP purpose. So you have to not look at the FTE comparison in the forgiveness calculations. You have to look at the treatment of owners. And so one of the downsides is that if somebody didn't work for your co-op last year, they may not have any amount qualifying for the forgiveness. An upside is you don't have to worry about some of those FTE rules. So that's an important one to look at. It's not designed for worker co-ops, and so that's a little twist that's unfortunate, but is in there. And then another thing to consider is, as of right now, the PPP money will be taxable. They defined it as non-taxable, but then the IRS came out and said, well, the expenses you pay with it then are non-deductible. So essentially, the PPP money is taxable. For some businesses, that will trigger taxes next year. Of course, that does mean you may be able to allocate that as patronage dividends. But it is something to think about. Profitable co-ops that are looking at quarterly estimated payments need to consider that that money may be part of your taxable income for next year. So that's the quick last thing. If you're a fiscal year entity, which not many worker co-ops are, and the PPP forgiveness crosses over your fiscal year end, you definitely want to hold off on forgiveness. You don't want to file a tax return until we're sure that that PPP money really will be taxable. Some members of Congress want to add into this stimulus bill that it's non-taxable, which will change everything again. So waiting is definitely a good idea.
Wow, that was very, very helpful information. I didn't know all of that.
Anna, your reaction was priceless.
Can't believe that. Thank you so much. So, and for the PPP, we have a question here that is Annie asking for insight in how to handle PPP loans. If whoever answered that question could maybe clarify a little bit with a little bit of nuance, that would be great. I think just a little bit, Bruce, if you could go into what types of expenses, just generally speaking, are allowable for organizations that have the PPP loan.
Yes, the main one, which will apply to all worker co-ops, is your compensation. So that's a pretty broad definition of that. So that does include health insurance and related employee benefits. The big limitation for worker co-ops is that when you treat someone as an owner, they're not allowed to be paid more or to allocate more to the PPP compensation expense than they were paid in the year before. So you'll need to look at that part of the equation, but anything related to employing somebody pretty much is allowable. And then you have rent and related expenses, and then some debt payment amounts as well. But I think for most folks, it's going to be compensation.
Great. Can I ask a follow-up question? Bruce, have you heard anything about rent in terms of the rent category where home office reimbursements fall?
Yeah, that would certainly be allowable, but there is a question about having a lease in place, because you'd have to make sure you read those rules, but it does talk about you have the obligation in place before the PPP money starts. So if you have an agreement with a member that you're reimbursing them for rent, that would work. But if you're just sort of doing it casually, you have to consider whether you really met those rules or not.
Okay, so if it's part of a monthly allocated expense,
yeah,
that would count. Great.
Mm-hmm.
Great. Thank you.
And I just received a follow-up question. Is that okay?
Oh, sure. Yeah, go ahead.
Process-wise, that says, which scenario, Bruce, did you say co-ops do not have to worry about FTE?
When there are 21 or more owners, and in worker co-ops, it's pretty much always equal ownership. So that would put you under 5% owners for each person, and then you would be treated as an employee, and you would need to walk through the FTE calculation. If you have fewer members than that, then everybody is treated as an owner under the definition for PPP forgiveness, and you would not calculate the FTE numbers for those folks.
Great. And if you have questions about how to handle your PPP loans, you can certainly, I know that we will be continuing to reach out to our friendly Wegner CPA to for developments. And I will also say that the blog, if you subscribing to the blog, has been really helpful just to stay on top of whenever SBA issues any guidance. I get an email, and Wegner also has a bunch of resources on their website, so that's super helpful. Are there any other questions about the PPP? I'm seeing several other topics, but I'm not seeing any others on PPP. So unless there are any that I am missing, we can shift gears a little bit for the last few minutes. Okay. So we're definitely not going to have time to answer all the questions. I'm really appreciating the level of curiosity that folks are bringing to this, and just to keep showing up for events like this. And we can provide our contact information as well if you'd like to continue to keep the conversation going. Can we talk a little bit more about the relationship of profit sharing, or the distinction of profit sharing for an LLC co-op as opposed to the patronage outline that I just showed with the slides? I'm wondering, Bruce, if that question is for you.
Sure. So the tax rules for an LLC tax as a partnership are very different than the tax rules for a co-op tax as a corporation. And so under the profit sharing rules for partnership, all the profits have to go to the worker owner. So then if you have set up your operating agreement to allocate your profits based on hours, for instance, as Annie was saying, her co-op does, except they're a corporation, but you can do that allocation in an LLC tax as a partnership. And then you would go through and determine how you're going to define your units of time, and then determine your percentage allocations of profits that way. And again, when you're a co-op corporation, you're falling under IRS co-op rules, and those are a stricter way to look at that, and they do require including non-member units or hours in your calculation. So you don't do that in profit sharing in a partnership, but you do that in a co-op tax as a corporation.
Right. Thanks so much. I could use maybe a little bit of help just deciding the direction for the last few minutes. Olga, I don't know, do you have a suggestion just based on what you're seeing in terms of the nature of the questions that we have?
Well, there was a few follow-up questions about patronage, which are at the bottom of the document that I had listed too. But I think there was, the other common theme is just like software recommendations that you have. If you have anything else you want to say on those, there's a few questions about that.
Great. Great. Yep. So cool. So resources. The software that we mentioned earlier, QuickBooks and Xero, are the two most common, at least in our experience with small businesses and co-ops. So that is, they're both big companies. Xero, I actually personally really like to recommend because it's really one of QuickBooks' main competitors, and QuickBooks parent company Intuit I have a lot of issues with, and in the interest of uplifting free and open source options, there is some program called GNU Cache, and it's spelled with a G a little weirdly. I'll put it in the chat. It's a free and open source program. The most important thing is that when you're doing your accounting, that you're using a double entry system. So double entry accounting means that on the back end, there's a debit, there's a credit, and you don't see that, but as a bookkeeper and as an accounting professional, it is the most important thing. So don't be fooled by programs like Wave or Mint or other money management software that says that it's accounting software. It's not. It really needs to be to have the the calculation needs to be based on double entry accounting. I can't stress that enough. So so those are my sort of main recommendations. I don't know, Alex and Terry, if you have any other thoughts about that.
Oh, that covers it. What you said, Annie.
Same. Sadly, I could just make a plug for whenever any tech company out there, and specifically tech co-op, is ready to create an alternative and an open sourced or co-op owned, ready for it.
Yeah, I'm so down to work on that project. I have so many ideas. Other resources include outsourcing payroll. I'm seeing that a participant uses Gusto. ABC uses that too. We also outsource our payroll, and that is another, in terms of scope of work, really important thing to clarify that bookkeepers we do not take on payroll. We love to outsource payroll. Gusto has been an excellent choice for us. There are many other payroll companies out there, like ADP and Paychex. We really like Gusto. Xero also has, the accounting software I mentioned has payroll built in, and I think it works pretty well. I would not recommend QuickBooks payroll. Lots of mistakes are made with QuickBooks payroll. And, you know, I'm seeing a participant saying that Paychex is sketchy. I agree. Let's just go with Gusto. Gusto's our recommendation. If you want to use Gusto, hit us up. We have a referral link and you can get a free month of payroll if you want it. So, and
also I'll just add in there that when you're looking at a payroll company, which is not exactly the question, making sure that they actually pay your taxes for you. You get what you pay for. So some payroll companies are cheaper because you still have to go in monthly or quarterly into state and federal online systems. Or if you live in a great state like I do, Vermont, that's behind the times, you might have to write a check for your taxes. And so you really want to make sure that when you're looking for a payroll company, they are taking all your money and paying the appropriate tax agencies for you.
Key.
Ta-da.
So stay tuned. The Slack channel on this topic is being created as we speak. The blog I was referring to is Wegner CPA's blog. Log on to their website and subscribe to that. Bruce, any final comments?
No, I think this was really good. You know, if people could stand it, I'm sure we could talk for another hour and a half.
It's true.
Not sure people could take it. So,
yeah.
So thank you everybody for sticking with us.
Thanks,
Likewise.
everyone. I remember last year when we did this, we somehow got into like the difference in patronage between Puerto Rico and the U.S. and the 50 states. I don't know. There was some wild, amazing, fun, exciting learning that happened. So I'm sad that in the online format, we're not able to learn as much from y'all. But I know that so many of you out there are super smart and brilliant and doing amazing things and teaching us a lot as well. So I just want to add that element that I know we're losing some of that, but in this moment, but it's out there and y'all are super smart and doing such great things. So thanks for talking finance with us for a while.